Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive in here. Let's see what people are sharing on social media. If you want to follow me, at Funny_Finance. And if you want to join our community, we are actually doing a question and answer session right now where you can jump on Zoom off the website and you can interact with me directly. We have a discount going on, LEAP, L-E-A-P, if you want to try it out, 50% off the first month and a little bit larger discount on the yearly membership. So accidentally retired, he says, how much are your monthly groceries costing? Ours are around $1,200 to $1,300 a month for a family of four. We eat out about 2 times a week. I would guess that mine is more than that. We have a family of 5, 2 6-year-olds, a 10-year-old, and myself and my wife. And I eat like a dump truck. So I would say we're probably just a hair over that. And we don't even eat out all that often. And I don't even add it up anymore. I'm afraid to know exactly what that number is. But that is my largest expense is food. Food and it's more than my mortgage at this time. Harsh truth, 99% of people will never become millionaires. In 3 words or less, what prevents most people from becoming wealthy? I think I think a lot of it deals with people just I think a lot of people aren't trained to become wealthy. I don't think people teach them how to become wealthy is one maybe aspect of it. Now I don't know if I can do 3 words or less, but I think a lot of people don't care to become wealthy either. I think they just want crap. And becoming wealthy isn't about accumulating crap. It's about doing what you want with your life. And if that's what they want to do with their life, who am I to say no? I would say the same thing about people who are overweight or people who are they don't want to be fit. You could say the same thing. It could. I mean, I think it's a lot of things. You can't really sum it up into 1 or 2 or 3 different things. Tavi says, now it's official. Gold just had a quarterly close at record levels, likely marking the beginning of a secular bull market. This indeed is one of the most exciting times to be a precious metals and commodity investor that I can recall. Game on. As gold is breaking to the upside here on a quarterly candle. The quarterly and the monthlies are stronger because you're closing all of these different time frames out on longer time frames. So it looks really good for gold, and I think we will continue higher with gold. Here comes the inflation. The future is so bright for the energy market, I got to wear shades, says Tony Greer. So generally what occurs is you get the gold market to break, and then energy comes ripping behind it. Gold's been going up since October of 22, and oil, I think, is just going to get going here. So there's that lag. It takes about a year lag. Gold's already been ripping. Gold's now obviously ripping out of just about every time frame on a new high here. So I think our boy oil is going to come behind it and start ripping too. We've got Petrobras here. It looks like they're hiring a bunch of different new boats, and they forecast to hire 12 support vessels, platform supply vessels. They've got all sorts of stuff that they are hiring here. Petrobras will have a fleet of approximately 25 drill ships in 2024 used in oil research activities. By 2028, the company expects its fleet to reach 30 rigs. They've got a bunch of subsea stuff going on, new vessel contracts for the period of 24 to 27, already in advanced stage negotiations. I don't know about the activity of cabotage. Cabotage, that is a transport of cargo carried out by ships within the limits of Brazil's coast. So these guys are really ramping up off coast for Brazil in terms of energy services. And I have, of course, am playing the energy services, and I do like the PBR. Grady says, when I hear classic contrarian sayings like buy low, sell high, be a contrarian, buy when there's blood in the streets, be greedy when others are fearful, I think about the commodities. He says, I think about the commodities versus general equities chart. Commodities are extremely undervalued versus the stock market. And here we are. Look at this, guys. Double bottom this. Everything but commodities bubble, ready to rip to the upside here. And a lot of it is gaining momentum as I speak. When this ratio moves up, commodities outperform the stock market. The chart has that preparing for a slingshot look. And maybe we get a big slingshot of this thing. If we do, this is going to be a completely different world in 5 years, guys. If commodities does what he's potentially saying here. I'm sure it's going to be a combination of commodities going up and the stock market going either sideways or down. And that combination is going to bring this all the way back to the upper end. That's a 36x in terms of purchasing power of the CRB versus the Dow Jones Industrial Average. So we're going to go up towards the top of the 1970-1980 ratio chart back then. Very big rotation of money. Here is the liquidity index, has also stalled recently, even as the market continued to accelerate higher. The last time there was a gap of this magnitude, the market corrected 10% last summer. So he's saying the liquidity, which is in the red, is pulled back a little bit, and the S&P continues to work its way on up. I do expect that Powell is probably going to interject here at some point and do some sort of something with Biden and the presidential election. So maybe something is in the works here. I don't know. Gergen says, surprisingly, energy led all sectors in Q1. So that's good because that's where I've got my money. Energy sector up 12.6%, and all the rest are behind it. S&P is up 10% for the first quarter. This is all pretty big moves for a first quarter move. Utilities and real estate kind of lagging behind. We have Rashad here talking about silver junior miners. Junior silver miners, SILJ, is breaking out from a 4-year falling wedge formation. In previous instances, SILJ yielded 250% and 120% respectively. I would not be surprised if by the third quarter of 2024, SILJ doubled in price from present price level. What do you guys think? You think we're going to get a double out of this bad boy, or do you think we could even get more out of SILJ? Now, SILJ does real well when interest rates go sideways or lower, and I think that's what it's basically front running a potential move lower in interest rates. So I think it's possible. I think there could be a big move in silver miners. Totally agree. U.S. nat gas power burn is up 4.5% year to date. Looks like we were intermingling with the 2023 era here. It looks like we're just popping out a little bit higher than 2023 on week number 12 or 13, wherever we're at. Holger, good old Holger, he says the recent brutal rise in commodity prices is perhaps a hairbringer. Is that how you say that? Hairbringer? That stock market is now seeing a rotation from highly valued tech into value commodity stocks. Cocoa may be an exception with a 132% rise year to date, but other commodities have also risen sharply, including gold, which ended Q1 at an all-time high. So this is NASDAQ 100 relative to the Bloomberg Commodity Spot Index, and we're at a very high level here, bubble level. And I do think we'll probably head lower. Looking at this fractal, looks like this sideways motion is here at a little bit of a pullback there, maybe over exaggerated. And this blow off peak, is this blow off peak? I don't know. We'll see. I think you guys can see the whole chart there. There you go. Coming on back, we've got Materials XLB. So Materials just registered their 10th consecutive week of gains, the longest streak on record since the launch of the sector Spider XLB. 10 consecutive weeks upward is what we're seeing here. And maybe we've got, this could be a breakout or maybe we have a false breakout. Tough to say. The other two spots that had this type of run up, one was towards a peak. The other one was low, coming off of a bottom. Now, that's where I think we're at. I think we're coming off a bottom and we're breaking to the upside with a bunch of upside potential. That's my view on it. And the reason I have that view is because oil is breaking out and all these other things are breaking out. Commodities are cheap. So I'd expect this to be breaking to the upside. We also have home builders working their way up. We have a shortage of homes in the system. And during this time frame, we had a bunch of homes in inventory. So I think we've got a big, long way to go for Materials XLB. Here's XLE. Oil stocks ETF, weekly close, big breakout of the bullish cup setup. Crude oil on its way back to $100 this summer. Inflation coming back in 2024. Will the Fed do 3 rate cuts with oil at $100? Commodities exploding with weaker USD on expected cuts. So I think the market's front running these rate cuts. I'm also see strength in the home builders too, and the rate cuts I think are going to be good for all these different sectors. Gold's also, I think, pricing that in as well. Commodities performance, March 2024, cocoa, silver, and gold. It was a great month for most commodities, especially precious metals. Had to include cocoa as an honorable mention after it ripped 50% due to significant supply disruptions in Africa. So this is the March 2024 performance, and cocoa's up 50% in March of 2024. Silver, gold, palladium, crude oil, this is where I think the potential, even going forward, is at. You got natural gas, aluminum, copper, platinum. These are all good. I like all these. Then taking it on the chin, iron, nickel, uranium, lead, and coal. Those are the ones that are down. These are probably ones to start looking at, and these are probably ones to probably start selling. Because they're not going to go up that much that fast forever. You're not one of those people who keep waiting for money to rotate into treasury bonds, are you? That's no way for a human to have to live. This is TLT, treasury bond prices divided by gold, and it's just been an absolute decline in terms of treasury bonds versus other assets. This is treasury bonds versus the S&P 500. Again, absolute decline, total destruction of purchasing power in bonds. Here's silver. So we closed the month quarter inside the red wedge. This implies that $28 should be coming very soon, and this roadmap continues to play out as expected. What's next for PMs? Check out their website. But here's the cup and handle. It's a monster from 1970s. The lead-in, the cup, the handle that's forming, and the broken downtrend line that we are breaking. And hopefully we can get up past some of this resistance and go to the promised land in a land far, far away, maybe even up into the multi-$100 range for silver. Gold's role as a neutral asset with millennia of history, as money is experiencing a resurgence relative to U.S. Treasuries for global central bank reserve accumulations. These monetary institutions are left with no recourse but to assume responsibility for these challenges. acting as primary liquidity providers to address their own sovereign debt and asset valuation imbalances. We are witnessing what might be described as the most undisciplined monetary and fiscal environment in history. Our latest research letter is out. This is foreign central bank transitioning towards gold, excess treasury issuances without major buyers going down, and central banks accumulating gold at record paces moving up. So central banks are buying gold and they are getting rid of treasuries. Look how much gold buying occurred back in the 70s and 80s. Wow. Coming on down. We've got gold had a historical breakout 12 weeks ago. Silver's now in the making of a similar mega breakout. So this here is a ratio chart, and this is SILJ versus GDX, and we've got a nice little resistance line that's straight above us, and we are hopefully going to break this out where SILJ outperforms GDX, the silver junior companies. I think the silver junior companies are going to be, they're going to do some crazy stuff here. If we can get this big cup and handle up here to break on silver. I mean, just crazy things, crazy things, if that can occur, which I hope is going to occur and which I think will occur. URNM versus Sprott Physical Uranium Trust. It's getting tight in here. A breakout of the golden squeeze means that finally the uranium miners will start to outperform uranium metal itself. And we're squeezing on up in this falling wedge, and hopefully we can break to the upside. Peter says, overly conservative in my opinion. Coin price forecasts updated silver predictions through 2035. Are these realistic or overly optimistic? 2035, they've got a silver price of $85 an ounce here at year end and a 250% increase. I think that is, I think we're going way higher than that. I don't know what it will look like, and I don't know where it will stay. I think that we're not going to go up in this linear fashion like they've got. I think we are going to explode higher and then come back to some elevated level. That's kind of how I see it, but I think we'll go multi-hundred somewhere up here, and then I think it'll settle back down maybe to $50, 50 to $100, something like that. That's where I think will happen. Here's foreclosures by quarter. We've got, well, just look at the chart. U.S. foreclosures by quarter here, and you can see we're still at just ridiculously low levels. We're at lower levels than any time in the mid 2000s. There's no forced selling here, guys. The housing bubble people are just wrong. You need forced selling for prices to really go down, or you need an overbuilt situation. And we don't really have that across America. Yes, there's probably a couple of cities that are experiencing some overbuilt situations, but there's the foreclosures, forced selling from foreclosures, it's just non-existent compared to history. This here is forced selling. That's where you get all your housing deals and where you get a housing bubble crash. U.S. oil breaking out. Here's the downtrend line breaking to the upside. This is going to be a big move. I see commodities are breaking out. I see gold breaking out. I think all of the things that come behind gold are going to start to break out here. That includes oil. It includes coal eventually and natural gas eventually. They'll be delayed a little bit behind it, I think. I think the fertilizers are going to rip. Agriculture is going to rip. You're going to see a lot of things start to move here. And unfortunately, it's going to impact my food prices still that I went over the first one, and it's gonna definitely impact that over time. Definitely. Monthly breakout secured for Occidental. Doesn't hurt that Warren has a 30% stake in the company either. There it is, breaking to the upside. I'm seeing a lot of breakouts to the upside in the oil sector and energy service sector. I have a feeling that we're at the beginning of a third leg. This is the first leg. and then this will be the potential third leg. So, yeah, that's kind of, I think, where we're at. With that, we've got JC saying the idea is not get left holding the bag. It's even better to profit from the downside, benefiting from this former darling making new multi-year lows relative to the S&P 500 is as American as apple pie. In other countries, you can't do that. This is Apple versus the S&P 500 and new multi-year lows and a breakout of the uptrend here. Are these technology stocks going to pull back? And that's another thing to really question here is if we get a pullback in the overall markets in technology, let's say, is that going to impact commodities? And I would say yes, it's going to. And does this put us kind of at the same level as 2000, 2001? Or are we going to go down slowly enough where the technology sector kind of just slowly bleeds cash out of it and goes into commodities? I don't have that answer. No one's going to know that with any sort of certainty. If we do a slow grind lower, we could have commodity prices just rip here. And then it just slowly leaks money out of technology into commodities. The other thing where people get scared or there's a liquidity event and everything sells off. But I think everything will sell off no matter what in that type of environment. And you just have to buy it at the bottom of wherever that liquidity event bottoms out at. And I'm not talking buy tech, I'm talking about buy commodities. Commodities are the most underweight relative to bonds since March 2009. So there's the underweightness of commodities, and this will swap and move on up eventually. We'll get there. We've got XLE, RSM indicator on XLE close to flipping into positive territory, signaling outperformance versus the S&P 500. So that's breaking out. That looks fantastic, actually. And that's where I think I started my last video. So we'll end it there, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We do have our question and answer session occurring right now. So jump on there if you're a member and ask me whatever you want or listen in if you're interested. And that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.